Hi, Traders Roberto. This is the analysis for tomorrow, Wednesday, the 13th. Um, Before I start, I've received some emails from some of you that are struggling the past few weeks. So what I'm going to do is give you just a simple um, strategy that you can do on your own doing top-down analysis. And this is something that I do every day. I do look at the advisory indicator, I look at the wizard, but the most important thing is two things: price action, candlestick patterns, and directional bias. The first thing I do is this is a 14 moving average line. I look at the daily chart, and looking at this chart, I know that on the pound dollar, the market's in an uptrend. And then I switch to a 4-hour chart, and I want to make sure that the 14 moving average line is angled like a 45-degree angle. So that means pound dollar, which is this chart, is in an uptrend. Then I use the 1-hour chart for entries. So if you look at the 1-hour chart, price is in and out of the 14 moving average line. And I want to favor and take trades in the direction of the 4-hour and daily chart. And this will help you also when you see trade signals on the wizard and trade signals on the FX advisory indicator, because we had a buy signal here earlier today during the Asian market. There was a buy signal, and that was in the direction of the daily chart. So if you're having troubles, you must do your top-down analysis. Look at your daily chart, look at the 4-hour chart, look at the 1-hour chart. If you have all three time frames above the 14 moving average line, you're going to make money. If you have mixed, if you have one time frame saying something and another time frame going in the opposite direction, look for another pair. Okay, so this is what happens. So now that I've shown you that, let me give you the targets or rather the trade analysis for these pairs. Pound dollar, next target is 134. Okay. So there's the target for pound dollar. Okay, you may ask, well, how do I come up with that? Well, first thing I do is I count the number of pips for today, and that was about 137 pips. The next thing I do is I take my Fibonacci tool and draw from the swing high to the swing low. And I'm looking for fib levels. And let me just make this different. Okay, so I'll take this paused and switched over to a weekly chart. And I noticed on a weekly chart there's a swing high back in last year of August. So that level of resistance would be the target, 134. Right now price is at 132.87. So that's how I come up with targets. I'm looking at higher time frames and trying to figure out where its price most likely is going to stall out before it retraces. And that is the most logical area up here, 134 level on the pound dollar. Okay, so on the 1-hour chart, most likely we're going to see a retracement before it goes back up. And then once that retracement is complete, it should turn around and head up to 134. And then we have to reevaluate. Is it going to close above 134? And if it does, then we start looking for buying opportunities. So that's the first signal. That's 134 is the target. Now that the pound is strong, I'm starting to favor that currency and look for trade signals. So the next one is pound Swiss. And the next target is about 128.50, I believe. Or 128.60. 128.50, which is about 100 pips away. That's the next target on this pair. Okay. So again, wait for that retracement to complete, or if it closes above the swing high of Tuesday, then that would be the target. So that we have two trades. And let me just post this really quick. 128.50 or 128.50, 128.60, anywhere around that level. Let's put 60 as the next target. Okay, now I do not have a stop loss because it hasn't retraced yet. Okay, but if you look at this chart, that is the most recent swing low. So I would put my stop loss 20 pips below that. Okay, if you take this trade now, then maybe the market will retrace to that support level before it goes back up and hits 128 target. If it closes below the support, that means there's going to be a deeper retracement. And this swing low is the most recent. Actually, this one here, 125.91. But eventually it should get up to 128.60. Okay, this one is CAD yen. Okay, and again, this is a 14 moving average line. Start with your daily chart. Notice that the 14 moving average line is slanted up. So we're in an uptrend on CAD yen. And it broke the most recent swing high, so it continues to rally. So on the 1 hour, on the daily chart, price is above the 14 moving average line. On the 4 hour chart, price is above the 14 moving average line. So we're looking for buying opportunities on dips. So here, the next target should be around 91.90, I believe. 190, 190. Around here. That's the next target on this pair. Okay. Now, let me put that in there. So next target 91.90. On CAD yen. Now notice the support level here. Here's the support, 90.30, and I most likely put, well, actually I would put my stop loss below the swing low, 90.20. So that would be a good stop loss below that. So it's 90, stop loss would be at 90. Give it some breathing room because markets do retrace between late Asian session coming into the European session. You always see that retracement occur, right? Now, because this market has been consolidating, it makes it easier to trade because this is a consolidation. Market rallied, today it consolidated. So this would be the second leg up. So I'd love seeing consolidation after a rally because usually it means it's just going to continue. Why? Because the daily and the 4 hour chart, price is above the 14 moving average line. Okay. Remember this 14 moving average line. It is your friend. It will help you. If you look at a 4 hour daily chart and everything lines up, you should not lose on a trade. Okay. If you do the proper analysis, there's no reason why you should be having losses. You're having losses, two things. You're chasing the market, number one. You're not doing your top-down analysis. You're not looking at 5 days of activity to find out, tell you what is the overall direction of the market. If you do that, you really should not have losses or minimal losses on a trade. It's when your stop losses are too tight, when you chase the market, you do not do your top-down analysis, that's when you get into trouble. Okay, it's all I can't express or stress that enough. That top-down analysis is the key to being successful in the market. You have to know what is the overall direction of any currency pair at any given time. And if there's no clear direction, then just move on, find another currency pair to trade. Okay, so I think, I'm not sure if I have any more trades set up. Aussie Swiss, the Swiss is very weak. Okay, so pound Swiss, pound dollar. Okay, we're in an uptrend. Target is 134 on pound dollar. Okay, and I'm actually going to enter some of these before the European session. So we have a buy on pound Swiss, target at 128. We have a buy on pound dollar for tomorrow. Buy Canadian yen. I'm still long on USD, Euro yen. So the yen crosses are strong. Yen is very weak. So pound yen, Euro yen, Canadian yen, they should all rally tomorrow. Okay. New Zealand CAD also. I'm still targeting that 89.90 level up here. I'm waiting for a retracement. And New Zealand yen is also in an uptrend. Okay, again, 14 moving average line. Notice how price is above the 14 moving average line on the 4-hour chart. And let's look on the daily chart. Price is above the 14 moving average line on a daily chart, so we know that when all time frames, 14 moving average line is below price on all time frames, you've got a great rally. Okay, it's very important to do your top 10 analysis, otherwise you have no idea, you have no clue what the market is doing. If you're only looking at 5, 10, 15-minute charts, you'll never know where the market is going. Okay, so that's it for the tutorial. I'll post these, and when the trade room opens tonight, we'll go over this again, and if you have any questions, that'll be great. All right, see everyone in about an hour.